Hey guys, thanks so much for joining us. We very much appreciate it. On the line is a friend who we haven't spoken to in far too long, Alasdair MacLeod of financeandeconomics.org and goldmoney.com. Alasdair, welcome back.
That's my pleasure. My pleasure, Sean.
It's a real thrill to have you on. We have so much to talk about today, and also on the line is our buddy and daily contributor, Rory from SGT Report. How you doing, Rory?
I'm doing well, and I hope you guys are.
I'm doing great.
Ditto.
I've been having some mic trouble, guys, so if my mic goes in and out on this, my apologies. Alasdair, so much to talk to you about this time. I want to talk about Ukrainian gold. I want to talk about treasuries being sold by foreigners to the tune of $104.5 billion. And you know that we always put up great articles from contributors like Zero Hedge on our website, SGT Report. I tweaked the headline to say, as John Kerry issues ultimatums, world sells treasuries. I mean, this is a big deal, isn't it? $104.5 billion in a week, and that comes off of last month where they sold $48 billion in treasuries.
Yes, it is a lot, and of course the rumor mill, sort of puts two and two together and says, "Oh, it must be the Russians, getting their money out, or at least getting their treasuries out of the Fed's custody and into some sort of safe haven until the Ukrainian situation blows over." That could well be true. It wouldn't surprise me. When I think back to the Cyprus mess, the Russian oligarchs basically lent on the banks in London and got their money out before it was all shut down on them. So this sort of preemptive action, I think, is certainly in character, and I wouldn't be surprised if it is to do with the Ukrainian situation.
Now, our friend Andy Hoffman, who we have on pretty regularly, he says, and I quote, "It's a game of financial musical chairs, and it's coming to an end," end quote. That's in reference to these treasuries that are being sold. You know, when we talk about the end of the dollar and the end of the Western banking scheme, this fiat Ponzi scheme, and we've been talking about it coming to an end for a very long time, is this not exactly what we would expect to see as the game of musical chairs ends? I mean, $105 billion worth of treasuries sold in a week is just an astounding number. I mean, at this rate, the dollar couldn't possibly have that much longer to stand as the world's reserve currency, could it? Or is it just a race to the bottom for all currencies?
Well, it's a race to the bottom for all currencies, but you're right. Of course, it's not the end as far as treasuries are concerned, so long as the Fed continues to print money at such a phenomenal rate. I mean, I know that with a bit of tapering, the pace has reduced, but the quantity of deposits and cash in the system is still increasing at quite a rate. And as I'm sure some of your listeners are aware, I've constructed the fiat money quantity to try and measure this. And essentially, it's the difference between sound money and unsound money. And if you look at all the unsound money, the fiat money quantity is accelerating at an enormous rate. It's now about 68% above its long-term trend, which was established before the Lehman crisis. Since the Lehman crisis, obviously, the monetary base has been expanded hugely. The Fed has done QE1, QE2, and QE3, and the result of all this is an explosion, if you like, in the quantity of dollars all around. And the world has got very used to having all those extra dollars, and that's still going on. So there will still be buyers for U.S. treasuries, probably mainly the Fed itself.
Let's turn our attention to the Ukraine. As we record this interview on Saturday, March 15th, there's a referendum on Sunday, and the people of Crimea will vote on whether to secede from the Ukraine and rejoin Russia. John Kerry has said that regardless of the outcome of that vote, the United States will not recognize it. So regardless of what the people choose, the United States and NATO are going to continue to kind of pick at this open festering wound in the Ukraine, which for all practical purposes could push us all towards World War III, because it appears that Putin is certainly not willing to back down. Please give us your thoughts on this.
Basically, I think this is World War III, but it's not a conventional war. It's a financial war. And I'm very concerned to see that the NATO members are trying to escalate this as a means of stopping Russia from whatever Russia's ambitions are in the Ukraine. Now, I think we're in a very weak condition to embark on a financial war. So far, it's been a financial Cold War, with gold at the center of it. China has been accumulating gold. Other Asian states have been accumulating gold. In fact, it's something which is common to all the members of the Shanghai Cooperation Organization, which runs from Russia and Belarusia the whole way through to China. So, the Cold War is now morphing into something a bit more serious. Now, so far, China is standing on the sidelines. They're saying, well, it's not our style to get involved in this. But the problem that China has is that she is in this association with Russia called the Shanghai Cooperation Organization. Now, when push comes to shove, she will back Russia. What she is hoping is that by not interfering, she won't help escalate a very, very worrying situation into a crisis. But given that I don't see Russia backing off on this, and Russia thinks that she's got holds a lot of the cards. I mean, she holds all the cards, really. I can't see Russia backing down, and I find it difficult to see what the West's game plan is here. I mean, we're going to have to try and find a means of negotiating between the financial war combatants, if you like. China, I think, is hoping that it can maybe make a contribution on that side, but I think it's extremely worrying. I just can't see how anyone can win from this. And as I said earlier, we are in such a sticky financial position. We can't really go in and tell Russia, right, we're going to close down your SWIFT arrangements. We're going to refuse to allow you to deal in dollars. In fact, all that would happen is that any business in terms of payments and so on and so forth would be all routed via China, and then it would become anonymous, and there's nothing we could do to stop it anyway. So it just seems to me that the fallout from this is going to be very, very damaging to the West. And I think that what is interesting is the Cold War was fought really over gold. China has been accumulating gold. We know that in 2013, the central banks in the West have been supplying gold into the market to keep the price down, because you don't hit the price and get it down to $1,300, $1,200, whatever, without actually following it up with supplying the real stuff. They have been supplying the real stuff. And the idea that ETF liquidation has been sufficient to satisfy Asian demand is an absolute joke. The Asian demand has been considerably in excess of that. And this is why the central banks have been supplying this gold. It's all ended up in China and other Asian states. In effect, to say that China has cornered the gold market is hardly an exaggeration. And now we are going into World War III, which is a financial war. I mean, it's just absolutely crazy. And I'm just amazed that the politicians haven't been told by the central bankers, for goodness sake, we know that politics matters to you, but this one's going to backfire on you big time if you start talking about sanctions. Yeah. So that's where we are.
Yeah, that's great analysis, and what a conundrum for John Kerry in the United States to be in a situation where maybe they would try or have to threaten, Russia to say, you'll no longer be able to use dollars, when in fact we need them to continue using dollars. It's a little bit like that cartoon of a man holding a gun to his head, and he's saying, "Stop or I'll shoot." Who would Kerry really be threatening? We'd be shooting ourselves in the foot or the head, I think, if we tried to play that card. And the world knows it. Did you see the news about the armed men, about 15 armed men apparently taking the gold out of Ukraine and putting it on a military aircraft bound back for the United States? It strikes me as being interesting because earlier that week there were reports of Blackwater on the ground in Ukraine, and the citizens videotaped them and were very angry about it. And then a few days later, this mystery aircraft and these mystery armed men with machine guns apparently removed 40 boxes. And I want to give credit to Zero Hedge and Jesse's Crossroads Cafe for really digging into that story a bit. And it's an interesting one, isn't it? I thought that it wasn't very long ago that Bernanke said that gold is nothing more than a tradition. I wonder why we'd be so interested in the Ukrainian gold, Alasdair.
Well, Bernanke followed it up by saying, "I don't understand gold, and nobody else does either." So, um, but yes, I mean, it could well be that the Ukraine government in Kiev has shipped out whatever gold the central bank there actually has in its vaults. That wouldn't surprise me at all. I would have thought a better place to ship it would be London, where at least it would be available for the market. But when things are done in a hurry, logic doesn't necessarily prevail. It wouldn't surprise me at all. But we're not talking about a huge amount of gold in the scheme of things. I mean, 33 tons, I think, is a figure that's been mentioned. I mean, that is less than 1 week's demand by the public in China. So it's not a huge amount. I think actually what's more interesting is a bit of news which I saw yesterday, which I think has slipped under the radar, given everything that's going on in the Ukraine, and that is that the head of the Bundesbank, Jens Wiedemans, has said that he's going to redouble his efforts to get the gold back to Germany this year. Now that's interesting because a lot of people have been, the official line has been, that this is as much as we expected to get back, and no, this was in accordance with the agreement, and there's nothing wrong with it, and don't read anything into it about, we wanted more gold to come back. This is in complete contradiction with that, and it supports the thesis that basically Germany's gold no longer exists. Otherwise, why wouldn't America provide it?
And all of a sudden, the Ukrainian 33 tons of gold looks awfully good, since they shortchanged them on their first year's delivery. I mean, they only delivered 5 tons, or somewhere around 5 tons, and they were supposed to deliver somewhere around 50. So 33 and 5 is 38. So they're a lot closer.
What do you think it's going to? It's ship is flown over to New York and then flown over back to Germany.
Yeah, talk about robbing Peter to pay Paul.
Well, I think that there's been a lot of that going on. I mean, quite honestly, we don't know. But it would be extremely helpful, I think, for the Fed's credibility if they actually did a proper audit on their gold. Because, we're now in a situation where we just don't believe anything they say. And that is not good for public credibility for the world's major central bank.
Yeah, and I want to give a little credit here to Gata, who's been on this case of trying to find out what happened to the gold in the Ukraine, and a great article from investmentresearchdynamics.com, which Rory posted as GT Report earlier on Saturday. Just want to read this last 2 paragraphs to you guys. It says, it's talking about Gata and Chris Powell on the case of the Ukrainian gold, and it says, Mr. Powell has queried the National Bank of Ukraine, the Ukrainian embassy in D.C., and the Ukrainian mission to the UN in New York City. Crickets. No response. As Chris states the case, quote, the difficulty in getting a straight answer here is pretty good evidence that the Ukrainian gold indeed has been sent to the United States, end quote. The author of this article goes on to conclude, unfortunately, it is likely that the citizens of Ukraine will end up paying the same price for allowing the U.S. to safekeep their sovereign gold. That price is the comforting knowledge that their gold has been delivered safely to vaults in China under U.S.-UK bullion bank contractual delivery obligations, where it will be locked away for centuries. Your point couldn't be better, Alasdair, about auditing the U.S. Fed's gold. And I guess you guys, if this gold isn't going directly over to Germany, this author believes it's going to China.
Well, I agree with you entirely. I mean, we've got no option but to agree with that, because we do have a pretty good feel for the demand that's going through, because we get the Shanghai Gold Exchange numbers. That is actual physical delivery out of the exchange's vaults. On top of that, you've got the import, export, and re-export figures out of Hong Kong. Those are very accurate and unfiddled, not played around with at all. And on top of that, there is the gold we don't know, and that is what the government has bought from its own mines. Now, it's meant to put that gold through the Shanghai Gold Exchange, but do they? I don't think so. And now I can only express an opinion, but I would back up my opinion by saying that no Chinese refined bars are seen outside China. I was discussing this very point with one of the major refiners in Switzerland last year, and he said that we sometimes see bars out of Russia, They do turn up, not every day, but we do see them. But I have a note posted on the notice board in the gold refining works. It says, if anyone sees a bar coming in from a Chinese refinery, to let me know immediately. And I haven't seen any at all. So gold does not get out of China. So the mined gold, I think, which comes from state mines, I doubt if that goes through the Shanghai Gold Exchange. So that is an extra, up to an extra 430 tons a year being absorbed by China, which isn't really being recorded. On top of that, you've got whatever the Chinese government buys for itself in London. That isn't recorded either, because that doesn't go through the Shanghai Gold Exchange. On top of that, you have got the demand from the very rich Chinese who buy gold and don't necessarily import it into China or import it privately into Hong Kong or Singapore or wherever. There's all that in addition. So we have a situation where China alone, on the figures that we see, more than takes out the rest of the world's gold mine production. And on top of that, there is extra demand, which we don't see. That leaves a minus figure for India, a minus figure for Turkey, a minus figure for every other gold-friendly state in Asia, which basically is a total of 4 billion people. It's a crazy situation. Now, the gold is being supplied, has been supplied through 2013 by central banks. It had to be. And I managed to find out that up to 1,300 tons had been supplied out of the Bank of England's vaults in the months between its year end, which was the 28th of February 2013, and around about mid-June. 1,300 tons gone. Now, that sort of number begins to fit in with the amount of gold that we've exported to Switzerland and in turn has been exported from Switzerland to China. We are running out of gold. I don't know how much there is left, but it's pretty empty. And talking to our refiners, they tell us that the gold that is now coming through the market is very old gold. It's been stuck in the corner, it's dirty, it's dusty. It's 995, not 9999. In other words, it's old refined gold to the original LBMA standard. And they don't particularly like it because they have to recast the stuff completely to get up to the new Chinese standard, which is 4 nines into 1 kilo bars. So, we've run out of gold. I mean, we really are. The vaults are empty, and China knows this. Russia knows this. So, one way and another, this is why I think the developments over the Ukraine are very, very important. Because if we want to take them on in a game of chicken, they have got us. I mean, there's nothing we can do. We've got no gold. The gold price, they could drive it up to $10,000 tomorrow. I mean, well, Monday. I mean, and there's nothing we can do about it. It would bankrupt the Western banking system. Now, I don't see China wanting to do that. I don't see Russia wanting to do that. But if we want to cut up rough with them, then I can tell you they'll have no compunction but to declare the financial equivalent of nuclear war. And that is what I see at the moment. That is, to my mind, a huge, great danger.
With the Russians getting ready to open up their own gold market, the equivalent of the LBMA or the COMEX, and the Shanghai Gold Exchange already going full tilt, do you see that having an impact with everything that you just described, and the fact that the Chinese alone are taking all of the global mining production? I mean, there's got to be a break point for the LBMA and the COMEX based on the fact that the Shanghai Gold Exchange, the new Moscow Gold Exchange is going to open up either later this year or early 2015. That's 2 huge markets. Would you agree?
I would agree, but I think we've got to sort of, not think in terms of time here. To my mind, the Ukrainian situation brings the crisis forward potentially to next week. Now, what I would hope is that when the Crimeans decide either to set up an autonomous state within the Ukraine, or alternatively, they decide, which I think is more likely, to seek to join join Russia. I mean, after all, they were originally Russian. I mean, it was gifted to the Ukraine by Khrushchev in a drunken moment, apparently, back in 1954. So, I mean, it is actually originally Russian territory. But I would hope that once that referendum is done, that the West backs off. The reasoning behind threatening at the moment is to try and sort of influence the outcome. But once you've got an outcome, there's no point in trying to influence it anymore. So I just hope that the West does back off, because otherwise we are likely to have a huge, great problem if this continues to escalate.
I would like to ask you in regards to the your FMQ, if you wouldn't mind describing what FMQ is and that you developed, why it's important, and as the manipulation of the gold market is being exposed, how it should impact gold.
Yeah, basically the concept behind FMQ is to reverse the steps where we started with gold as money, and it was then replaced by money substitutes. In other words, you would get you would get a banknote which was fully backed by gold. Or you would have your money on deposit in a bank, and it would be kept there as your property. Now that's genuine money. We went from there to a situation where, our great grandfathers deposited gold in the bank. We got paper out of the bank in the form of a promise to pay the gold back, if you like, one way or the other. And then the central banks were invented, and what happened was that the gold then went to the central banks in return for notes out of the central banks. Again, the notes meant to be fully convertible into gold. So in reversing that, what we do is we've got to take into consideration the amount of currency cash in issue. We've got to take into account the deposits that exist in the banking system. And we also have to take into account the deposits that the commercial banks have at the central bank. Because essentially, if we're going to get back to gold, to fully convertible gold, we have to reverse all those steps that I've just described. And that is what the construction of FMQ attempts to do. I have to say that the way in which it's been accelerating is really quite alarming. I don't know whether some of your readers might have seen the chart that I put up of FMQ, but broadly speaking, it grew at a rate from about 1959 or thereabouts until the Lehman crisis. It grew at a rate of about 5.8%. Now, the response to the Lehman crisis, as we all know, was to print as much money and credit and all the rest of it as it took to rescue the financial system. So at that point, FMQ actually took off. The trend, if it had continued at the pre-Lehman rate, it would be around about 7.5 trillion. Today, FMQ is just under 13 trillion. So you can see that this huge, great gap has opened up. That is the quantity of extra money that's gone into the system. Now, the purchasing power of the dollar doesn't actually depend on FMQ. It depends on the confidence that people have in it, that it actually has that purchasing power. But what I would say is that the further this gets stretched, this relationship gets stretched, then the greater the risk that the confidence that the dollar actually will buy a dollar's worth of goods, the confidence that that is the case will is likely to be tested. And on top of this, of course, the dollar is the reserve currency for the rest of the world. So in essence, you need to do a similar exercise to work out what the situation is with all the other currency around the world. And if you take the extra currency that's issued, the bank lending that's been issued, that's gone on the back of it, and then on top of that, you've got the shadow banking system, which is probably about another 70 trillion. That takes your gearing up to an extraordinary level. I mean, on the pre-Lehman Fed's monetary base, I have calculated this is about 180 times leverage. That's on that monetary base. And this is, I mean, that was the monetary base at that time was about 850 billion. This was just pre-Lehman. So we're looking at 180 times that. That is the amount of money in the world which is actually pyramided on top of the dollar.
Oh
This
my.
is a staggering situation, and it is inherently unstable, and that's what worries me. This is why I'm actually very worried about this idea that we want to go in and teach the Ruskies a lesson about how they should behave financially.
Yeah.
I mean, can we really afford this?
Yeah.
It just sounds to me like we shouldn't be throwing stones in a glass house. It's just crazy.
Yeah. Stop or I'll shoot.
Well, yeah, myself, yes.
Yeah.
Exactly.
So, Alasdair, let's talk about precious metals and the price of gold. There was resistance at 1350 for quite a while, and I'd read many saying that once gold broke through 1350, it would just be clear sailing here, and maybe that's true. We're at 1382, I think, on Friday in gold, and around 2150 on silver. Boy, when you talk about 180 times the amount of money in circulation that there was pre-Lehman, there's a case to be made for owning physical precious metals, and I wonder if these metals weren't manipulated by the central banks and by the banking cartel. I really do wonder what ultimately a fair price would be for 1 ounce of physical gold and 1 ounce of physical silver.
Well, it's interesting. If I can just sort of correct your statement a little bit about 180 times. It's 180. The total amount of money in the world, including shadow banking, I calculate to be roughly 180 times the Fed's monetary base pre-Lehman crisis, when it was about 850 billion. Because since then, obviously, it's increased to close to 4 trillion. But coming back to your question on metals, it is, I think, very interesting because at the end of the year, everyone was bearish about gold and silver. The trend was down. The big boys were saying, you've got to sell this. They were talking it down to, I don't know, $1,900, $800, whatever. And that to me was really the lowest point in sentiment that you were likely to see. It turned round from there. The shorts have been squeezed. The short positions have been substantially corrected. There's still some shorts out there, of course. But interestingly, we've seen that GLD, people have been buying into that again. So sentiment is turning round. And the amount of gold that has gone from west to east has been absolutely massive. Effectively, we are cleaned out. And now we have a situation where people are beginning to buy gold in the West as well. And I'm not quite sure what response the Western central banks can produce to this. I mean, they can go into the market maybe and sell some futures and try and take steam out of market from time to time. But I think what they would do in that case is they would merely run into buyers on any serious dip. So we have a situation, I think, where gold has turned the corner. There are increasing numbers of people beginning to recognize that it's turned the corner. Nobody in the West owns it, and therefore you've got the potential for them to buy it. And I can certainly see this running up under normal circumstances to the 1400, maybe 1420 level, before we see any sort of reasonable consolidation. But given the political developments over the Ukraine, this thing could actually spiral a lot more rapidly than anyone thinks. Now, if that happens, then the West is in real trouble because the West has effectively sold short of gold. And I think that a very substantial and sharp rise in the price of gold will create great difficulties for the bullion banks.
With that said, Alasdair, where is the gold going to come from? I mean, you just gave a great case with all the numbers saying that China alone is taking all of the global mine production. And I've asked this question of many people. I don't understand where it's coming from.
Well, that's a very good question. Basically, there is very little gold left here. And I think the more people realize that what's happened, the more they're going to want it. And the answer at the end of the day, Rory, is that the price is going to have to rise to a level where the Chinese have some of that gold back. And, what that price is, I don't know. You need to ask a Chinaman, but I think it's going to be a long way up from here.
I would have to agree with that. I mean, and I do have one last question. With a continual slow burn, as Catherine Austin Fitz describes it, how does China get out of their situation with the ghost cities, the carless highways, bridges to nowhere that you describe in your latest article, The Bursting of China's Credit Bubble? And what role will gold play in their attempt to make a change with their current status quo?
Well, I think the two things are separate, because I think the reason that China has been buying gold as a government is a geopolitical story. They want to have a hold on the West, and I think that's deliberate. I think the reason that they've encouraged their citizens to buy gold has been, again, fairly simple. And that is that the more gold that the Chinese citizens buy, the less the trade surplus, and the less they need to intervene and buy dollars, if you like, in order to keep their own currency down. So I think there are good reasons why they have accumulated this gold. The other problem is they have got a huge, great credit crisis, which I think is developing as we speak. And that is, I think, very, very concerning. They have expanded the amount of bank credit and also the amount of shadow banking credit, if you like, in the system by huge quantities. I mean, it's almost it is considerably greater than we've seen in the West. I mean, we think we've been pretty irresponsible, but I mean, this is as nothing compared to what's gone on in China. And of course, sooner or later, when you get all these malinvestments, these investments that produce no income, if you start putting the brakes on the amount of credit, and whether it's the banks that do it because they get frightened, or whether it's the government that does it because it sort of thinks, well, this has gone a bit too far, is immaterial. You know, once you start putting on the brakes, people start going broke. And that, I think, we're beginning to see, and it's a situation which is going to get worse. And the other thing about a credit bubble is, as you've seen in America, over the residential property and all the securitization of that. It's a very similar situation, but far worse. You'll find that all sorts of shady practices suddenly become evident, and the whole thing is a sort of rather like a sort of fraudulent scheme, and the consequences are nasty, and there's no way it can be stopped. And I think that central banks make a mistake if they think that they can control the expansion of credit just by applying the brakes at the appropriate moment. All that happens when you do that is you start triggering, if you like, an Irving Fisher style debt implosion, where you get falling asset prices, which means that collateral values for the banks go down. The banks have to then sell more collateral in order to cover their positions, and so on. You get that sort of nasty situation. The difference in China is, of course, the banking system is owned by the government. So rather than banks going bust, I think that the currency is likely to take it on the chin. And we've seen some evidence of weakening of the Chinese currency recently, which has surprised quite a lot of people. But no doubt that, I think there's no doubt in my mind that it's, if you like, just a harbinger of things to come. One final thought. I was looking. I think we've got an FOMC meeting this week, I think, haven't we?
Yeah, you're right. That it'll be Yellen's first.
Yeah. What's interesting about that is that I'm convinced that the reason that they have decided to introduce tapering is they see some growth in bank credit, if you like, taking over from the expansion of narrow money through quantitative easing. Now, I'm interested to see that in the last 3 weeks, if you take M2 and subtract M1, you get a sort of proxy for bank credit. And that has fallen quite sharply over the last 3 weeks. Now, that I find interesting. So that might just change the Fed's view on tapering. They might just put it on hold for a little bit. I don't know, but that's just an extra thought, as it were.
Well, we'll keep an eye on your work as we do. We very much value your time and your intellect and your analysis. So thanks for joining us today. And just remind people where they can find your work, both over at Gold Money and at your own personal website.
Yep, which is financeandeconomics.org, and everything that I write at Gold Money gets posted at financeandeconomics.org, and sometimes a few articles which aren't suitable for Gold Money I will post at Finance and Economics. But in the main, if you go to either site, you'll pick up my writing.
Well, we very much appreciate it, and you guys can check out Alasdair's work at goldmoney.com, and again, financeandeconomics.org. Thank you very much, sir. We appreciate it. And Rory, thanks for joining us, buddy.
Thank you.
All right, you guys have a great week, and thanks for sticking with us. Thanks for checking out sgtreport.com for all the latest in real news 24/7. Have a great week.